Eco Money on Money FM 89.3.
$1.5 trillion is a significant amount of money, and that's the size of the investment gap when it comes to funding Southeast Asia's green transition. And this means there's opportunity for investors. That's according to the latest Green Economy 2024 report by Bain and Company, GenZero, Standard Chartered, and Temasek. Publishers of the report state that this means Southeast Asian markets now have a window of opportunity to accelerate decarbonization with actionable ideas and accelerators. To find out more and where exactly the investment opportunities are, I'm joined by Dale Hardcastle, Director of Global Sustainability Innovation Center at Bain & Company, and Tracy Wong-Harris, Head of Sustainable Finance Asia, Standard Chartered Bank. Thank you both so much for taking the time to speak with me today.
Great to be here, Rachel.
Thanks. Thank you, Dale. So as your report highlights, green investment, it rose 20% to $6.3 billion in 2023 due to renewables and green data centers. But we're still looking at a large investment gap of $1.5 trillion until 2030 to fund the region's green transition. That's a significant gap. Now, Dale, you've highlighted that there's a disparity between expectation and what's actually happening on the ground. Can you start off by elaborating more on that for us?
We're somewhat of an interesting sort of dynamic. On the one hand, we can see that, Southeast Asia is seeing a lot of progress and a steady, march upwards as we think about its decarbonization commitments and targets that companies are setting and plans and sort of other things. And at the same time, we can see more and more sort of green opportunities where one potentially sort of could invest. But as you say, there is a disconnect emerging as we look at the difference between maybe what people perceive and believe is sort of happening and the actual results that we're delivering, both in terms of emissions, which continue to grow across the region year by year, as well as the capital sort of commitments that stand behind it. So what do we exactly mean when we talk about the investment gap? The transition in Southeast Asia from what we have today, which is really a heavily, fossil fuel-based sort of economy, to a greener, lower carbon one that needs to happen at exactly the same time as we're growing quite rapidly economically across many countries in the region, is actually a huge undertaking, right? It's not something that's going to happen overnight, and it's going to sort of, take time. I think the good news, as you say, is, we are starting to see sort of a steady sort of uptick in sort of green investment across different sectors. This is, I think, true as we look at sort of different countries, as we look at different sectors. And equally interesting, we're seeing more kind of local companies and sort of corporates also sort of committing capital to renewables and sort of other things. But I think the challenge really is we need to do this on a much more sort of exponential scale than the slow and sort of steady progress that we're making. So to put that in numerical terms, we really need, rather than sort of single-digit billions in investment in things like EVs and solar and green data centers and other things, we really need tens of billions or hundreds of billions of dollars to sort of transition into this sort of new direction.
So the report also highlights that the biggest issue facing the region is greenhouse gas emissions, which probably is not what many consumers may be concerned about right now at the moment when we're talking about the transition to net zero. Maybe you can share with us some examples of how these decarbonization ideas can tackle this issue.
I think what's interesting is, as we look across the region, there's a lot of, different sort of ideas. And in some ways, many of the sort of, challenges that we face in moving forward, the first wave of sort of ideas is less about the fact that we need new technology, that we need to find ways to get investment moving and to do other things. So a lot of the analysis that we've sort of thought about in the report is tried to think about, where is the sweet spot of being both, really impactful in reducing carbon emissions, but also things that are addressable or more everyday language. What are the things we can do today, right, that are market ready and technically feasible and the like? And I think we definitely sort of see that there's quite a long list of different sort of ideas that fit in this, sweet spot, cutting across, things that we can do around nature conservation, agriculture, the power sector, transport, built environment, and other things. And the report, gets into a lot of detail around kind of the range of sort of options from, things that we could do that could help address decarbonization through improving farming practices, to better nature-based solutions to sort of conserve primary forests or sort of other things, more practical things that exist in perhaps the cities that we're in every day around energy efficiency and green transport, and then some other new sort of more emerging ideas that are getting sort of more attention, things like green data centers, which of course are sort of very sort of important as we think about AI and sort of rising sort of demand for digital services and other things, as well as sort of biofuels. So it's not necessarily one thing, but I guess many things. But I think it is really quite important in terms of its materiality. If we just look at the top 13 ideas that we talk about in the report, if we were able to fully sort of develop their sort of potential, it could represent on the order of an additional $150 billion per year in annual potential for Southeast Asia. And if we look at kind of all of the ideas that we sort of touch on, it could be worth double that at about $300 billion. And that's really quite substantial. If we put that in terms of ASEAN's GDP overall, that would be an additional sort of 5% on top of what we're already sort of forecasting by the end of the decade. So we spend a lot of time talking about the green economy and decarbonization in terms of the things that we have to do or the cost that we have to sort of incur. But these really could be strong economic agents for the region as we look to the future if we do them intelligently.
Tracy, did you have anything you'd like to add?
No, I guess building on what Dale mentions, from beyond decarbonization issue, Southeast Asia is challenged by structural constraint and needs systematic change. So let me go through a few of them. So if we look at the GPT per capita, like Dale also mentioned, Southeast Asia is still relatively low, about 1/10 compared to North America. And at the same time, it needs about 40% or more power for this decade. So from that perspective, I think we need to balance the growth and the just transition in this space. And then also there is a heavy fossil fuel legacy in the regions where over 75% of the energy mix today is fossil fuel blend. Also looking at the uneven opportunities and limited cooperations where the renewable is disconnected, where the plant is and where it's needed. So from that perspective, the need for kind of cross-border cooperation is important. Also, looking at the incentive as well. So looking at the current incentive is kind of more favorable on the fossil fuel, while the policy incentive is just not sufficient enough to drive green investment. So I think this is where the bit that the report also built on recommendations. Last but not least, and very important, going back to your original point about the huge funding gap, the 1.5 trillion funding gap, there's inadequate access to finance, and this material gap is need addressing. So I think this is where a more innovative financing solutions can help in addressing this. I think taking a step back as well on why there's inadequate access to financing, there are some barriers where in the regions where financing is being challenged, higher perceived project investments and country risk, in particular in the emerging markets, which impacts the returns. So the investments are harder to flow in from that perspective. So from there, I think the report provide a recommendation solutions on talking about blended finance. Using catalytic capital can potentially unlock 8 to 10 times potential financing pool to really scale up and fill the funding gap.
And as you mentioned, Singapore has a number of initiatives when it comes to blended finance. How can we see that, or are we starting to see that replicated across the region? I know we're going to go into accelerators to help build the ecosystem, but before we do that, are we seeing more blended finance models or support models across Southeast Asia?
Absolutely. So I think one of the two big program called Just Energy Transition Partnership. So where MAS Singapore is also involved with the two program in Indonesia and in Vietnam as well. So these are very big private-public partnership where, on top of my head, 39 billion commitment between the private and public sectors are working together to try to solve this issue to help to accelerate the transitions. in the regions.
That leads nicely on to the 5 accelerators that you've highlighted in the report to build these ecosystems when it comes to supporting finance. You also mentioned cross-border collaboration and a number of others. But when I first looked at the list, I thought, aren't many of these already in place? We see, policy initiatives, multiple MOUs on regional collaboration. So what is missing to get things moving?
So while Southeast Asia is making progress on the policy side, so we have seen the corporate disclosure, the launch of the ASEAN taxonomy, and setting minimum energy performance standard in some location. So while the policies is having a good start, yet we have seen that more work need to be done in the investment incentive and also regional collaboration, like you mentioned. So in terms of incentive, the country need to define its fit for purpose incentive, like the US did on the IRA, on the Inflation Rate Reduction Act, to make green investment more competitive in the regions. To use the incentive to focus on where the critical industry, the decarbonization pathway, to grow green expert and catalyze the green infrastructure, green energy. There are some of the recommendations and more detail in the report in this space. Looking at the regional collaboration as well. So we need to focus on advancing the regional cross-border grid, creating domestic and bilateral grid connections to promote grid flexibility. That's one of the key points. And also growing the high integrity voluntary carbon market is also a big accelerator we believe that we should be focused on. And from that perspective, we need to promote both the demand and supply side. And now on the demand side, we need to both investor confidence while to make sure there's high quality carbon credit in the market. And the good news is ICVCM, which is the Integrity Council for Voluntary Carbon Market, they have launched the international standard, which is called the Core Carbon Principle, CCP. The progress made today, 5 programs already being approved. And the next stage is they're going to the individual methodology, carbon credit methodology for approval. In the supply side, we need to leverage innovative finance to support nature-based solutions, project development. So from their perspective, Standard Chartered, we are definitely at the forefront on developing carbon market. We are the equity investor and also sitting on the board for CIX, Climate Impact X, a program that will allow voluntary carbon credit options and also provide a standard contract.
Rachel, you raised a really good point around, aren't these things all being done today? Which is a very, valid sort of observation. And I would say on the one hand, it's been positive that if we look at the dialogue that has happened between regional governments and sort of leaders and other sort of international players has begun over the last sort of few years to talk about more and more about these issues, right? Whether it's about grid interconnections or common languages as we think about how to finance and do things across the region, or even carbon markets. But we're still at a very, very early stage, despite the progress that's been made in being able to drive these things forward. We have, only the beginnings of kind of thinking about how we interconnect kind of blended finance and other things at scale kind of across the region. We still see a huge sort of shortage of capabilities and capacity. We still see, very little sort of transfer of across renewable power and sort of other things across national boundaries, et cetera, et cetera, et cetera. So in some ways, it's nice to see that the compass direction is sort of moving in the right path, but we still are a long way from having the GPS coordinates to figure out exactly how we're able to do this and where we want to move at scale.
I'm Rachel Kelly, and you've been listening to Eco Money on Money FM 89.3. Today we've been speaking to Dale Hardcastle, Director of Global Sustainability Innovation Centre at Bain & Company, and Tracy Wong-Harris, Head of Sustainable Finance Asia at Standard Chartered Bank, about the latest Green Economy 2024 report by Bain & Company, GenZero, Standard Chartered and Temasek. I'll be back with you next week for more eco news and views.